Hello and welcome to another episode of the Truth About Real Estate Investing show. My name is Erwin Cito, and I was at a conference recently which showed a video of Tony Robbins, his talk the year before, and he said something that really resonated with me. How how he was presented with the business opportunity, and basically he said he could not commit 100% of his resources, including himself, needed because the opportunity would not fit his personal lifestyle goals. My takeaway is that work and investments need to be designed to suit the lifestyle that you want, not the other way around. Um, Not to say I haven't been guilty of living in times of imbalance, as I'm experiencing now, as I'm finally getting back into the gym. Weights that used to be warm-up weights for me are now my workout weights, and I'm plenty sore, possibly even injured as I'm hobbling around. Uh, Going hard like Terry and I are these days with the Wealth Hacker Conference, plus everything else we have going on. 4 businesses, 2 young kids, 8-figure portfolio. It all takes work and time. Uh, the Wealth Hacker Conference is only a month away, November 12th. We've been making our rounds on other podcasts, webinars, speaking at events. I'd like to say thank you to Elizabeth Kelly, Corey Spurl, Christian Spitzvogel of Oreo, Austin Ye. I'm about to report his podcast after this. Dominic Kretz of Rockstar Real Estate, Seth Ferguson, Andrew Hines, Diana Lazaro, Coach Mag, my coach, Marianne Gillespie, Daniel Unsworth, John Schwenker. The list goes on and on for supporting us, especially to all of you who've already bought tickets and our sponsors. If you haven't bought tickets already, I highly recommend that you do. Tickets only go up in price as we get closer to the event. This recession is shaping up to be the one of our generation. Fear keeps climbing, and the deals are honestly you're getting better as time goes. So you want to educate yourself on what the experts are doing in real estate, stocks, insurance, private mortgages, and cryptocurrency. For example, the last time we had a real recession, back in 2008, the properties I bought back then, they've tripled in price or more. I'd love for everyone in the community to have to be as successful on this dip. Make wise investment decisions. Set yourself up for a comfortable retirement. Also, for those who are interested in sponsoring, we are down to like 1, maybe 3 booths left. So if anyone still wants to wait till the last minute to sponsor, you don't want to wait too long. Just reach out. Cherry and I's investments are generally passive and don't take that much time. We do need to visit them from time to time, and maintenance requests do come in, but they usually go directly to my handy person or my assistant. They can handle them. We just write the checks in order to keep our investments as passive as possible. We have more fun things to do with our lives. My point is, we're good with this. We're good with this level of activity at this point, so we can spend more time with our kids before they turn into teenagers and they don't want to be around us anymore. Last week, Monday, was our first day back at the gym, as I mentioned. The reason why I can't walk anymore. I was having to follow my kids' programming, as in doing the workout. My kids are doing a class, they're not on their own. So I had to join my kids' class because I'm too out of shape for the adult workouts, the adult classes. It was only when I parked the car at the gym that it hit me. For those of you who have gym buddies, you know how you form a bond with them. And that's what I want with Robin and Bruce. I hadn't thought this far though. For example, during the run portion of our workout, I low-fived each kid as we passed each other on the run. I'm huffing and puffing as always, as part of the workout, which included throwing a medicine ball up in the air several times, hanging leg raises, and then running. The adults, Cherry and I, had to run more than the kids, so naturally we're going to pass each other. And so as I see the kids when I'm back on the run, and they alter their path. They actually beeline, once they see me come out the door of the gym, they altered their path towards me so that to ensure that we could low-five each other. They see me suffer. It's actually I was like getting a bit annoyed at the low-fiving because I'm not in a good mood because I'm suffering, but it was really cute. Anyways, most importantly, with these family workouts is we save money. As we're on a family plan, we're buying in bulk, so we're getting a better deal from the gym, and we also save on time, which I love, which is really important to me, is being efficient with my time, getting my workout in, as this is a one-stop shop. So winning on many levels, supporting a good local business. I don't know, and all the parents I speak to, I have clients and friends with kids in rep hockey and competitive dance. I don't know how you guys keep up because it's so expensive and the drives are long. Hopefully, all of you listening out there who aren't our clients, hopefully you're successful investors as well. Because I understand that it's like $10,000 per kid, per rep hockey, per competitive dance, and so hopefully you're successful like our real estate clients are. I'm not sure how you do it, but if you're not sure how to be a successful real estate investor, just reach out, ask. Happy to share with you our experience, how we are passive investors in order to afford our kids. On to this week's show. If you can't tell, Cherry and I prefer to buy than rent. We're just talking about the gym. I'm happy to pay a gym membership so I can rent the use of their equipment and their facilities because I don't have the room for that in my house. I like hard assets and being in control in general. I do rent other things like cottages, hotels, cars while on vacation. And I choose not to own those things because I want my life to be simple. We used to lease our cars for tax purposes, and as those are also generally depreciating assets. We only bought our minivan when it came off lease because it got up in value, so it turned into an investment. Unintended. Other examples of wanting to be in control is of our real estate when we pass on from this world. I don't want our staff nor our kids to have to sell off our businesses or properties. Hence, we invest in insurance to cover the tax expense, as the good old government will want their pound of flesh when we pass on. As we prefer to own over rent, we prefer to have whole life insurance over term insurance. If you don't know why, that's because you're among the 99% of Canadians who don't know a lot about insurance. Because honestly, I don't even think my parents know. It's a lesser known investment, partly because it's generally for people who can afford it, and there's not that many who can afford whole life insurance. I only learned what Jayson calls the infinite banking concept strategy a few years ago at my real estate mastermind, where I'm the poor person in the room. I'm the poor person in the room, so I'm learning the most. Several members of my mastermind were already implying the strategy, and we even brought in an outside expert from one of the big banks to educate us on the subject. Unfortunately, the subject is not the easiest to understand until we met Jayson Lowe, founder of Ascendant Financial, co-author of The Banker's Secret, a simple guide to creating personal wealth for Canadians. Jayson is a leading financial professional in Canada, a leading expert. Him being the client of all the whole life insurance providers in Canada gives him an experience that I don't know of anyone else having. So he can speak from experience, again, from being customer of each of the different providers. At the end of the day, Cherry and I's policies, because we own them, they show up on our balance sheet when we show the banks what we own, our assets and liabilities, our balance sheet. Banks love to see this, love to see whole life insurance because they treat it as collateral and as an asset, hence they'll lend us more money. We can borrow against our policies at low rates, and we can pay it back later whenever we want, much like a home equity line of credit. Cheap money, flexibility, and control, all things I like. Hence, our plans in 2023 include growing our insurance policies. To explain it further in detail, I give you Jayson Lowe, our guest of this week. And also, if you prefer reading about the strategy, especially the accounting side, my lovely wife has written a blog post on the subject, how to grow a tax-free investment and minimize your taxes. I've included a link to Cherry's blog post in the show notes. I give you Jayson Lowe. Hi, Jayson. How you doing?
I'm terrific, Erwin. How are you?
Busy. But what's keeping you busy these days?
Oh, gosh, what isn't keeping me busy these days? We've got a number of operating businesses in our family group of companies, and travel has picked up, which I like to some degree and dislike to some degree. I think Zoom has been a really powerful tool for connection and getting business done. It's changed things forever, in my view. But busy traveling the country, talking about becoming your own banker, the infinite banking concept, and soon to be traveling the United States, describing that process as well with our company launching there. And so it's been really, really busy. I just got here. I just landed like a few hours ago, and we did some recording, and it's just an honor to be here. I've seen the pictures, and now I'm in the studio with a live studio audience.
Yes.
Comprised of one, my teammate, Peter.
Now people will have a reference point of how tall you are as well.
Exactly. Yes.
Yeah, I worn 6'3".
Yeah.
Because I worn Cherry coming in. Because again, we met you. We've only ever known you over Zoom.
That's right. Yeah.
Like you are our own advisor on insurance, more on insurance.
That's correct. Yeah.
Yeah, and then just in this world where now we're actually seeing people in person.
Yeah.
Because I've had a couple of times where people say like, "Oh, you're taller than I expected," and then I see people as well like, "You're way taller than I expected." I gave Cherry the heads up on the way in. Jason's tall, just to warn you. I think he's 6'2", 6'3".
Yeah.
Right.
Yeah, for sure. Yeah,
She's
and
like,
I'm
"No
the small
way."
one in my family.
Yeah, you have some like superstar athlete children, don't you know?
Yes. Yeah. My kids are. Oh my goodness, they're just. I can't. Well, every parent's so proud of their children, right? But I burst with pride. They're amazing. They love sports. We love having them enrolled in sports: hockey, dance, basketball, volleyball. Like 4 kids, it's a 24/7 circus ring of sport, and we love it.
That actually brings up a lot of questions. First of all, it's expensive, is it not?
It is, yeah. But it's a worthwhile investment because it's not just the particular sport, that they're involved in and that they're developing some skill set around hockey or basketball or whatever it is. Mm-hmm. It's learning how to be a great teammate. Mm-hmm. It's learning how to be coachable. It's learning how to really bring out your best potential, even on the days when you don't want to. There are mornings mm-hmm. where our kids, they don't want to get out of bed and go, mm-hmm. 6 o'clock in the morning to the hockey rink. Mm-hmm. But when they get there, they're there. Yeah. And
your team's relying on you.
Oh, exactly. And that's the key, right? Like your teammates are expecting you to be there, mm-hmm. and they don't expect you to be there slouching. They mm-hmm. expect you to be there bringing your very best. Mm-hmm. And those are usually the best games and the best, performances of the team is when... Think about even if you like to exercise, if you like to work out. I find, like myself personally, the best workout I have is the one I don't want to do. Because once I get going and I get into it, I feel great. And yeah, it's good. Yeah, I'm super proud of my kids.
And you're pretty high level, are they not?
Yeah.
Like AAA and like...
Yeah, AAA hockey and provincial volleyball and they've been we've had our kids involved in sports from a very, very early age mm-hmm, because we mm-hmm. wanted them to be occupied,
right,
and to be busy, and to not grow into teenagers and get involved in things that might not be mm-hmm. a productive use of their time, but yeah, it's good.
So how important is multiple streams of income to pay for these sorts of expenses?
Oh, it's critical. It's critical, and we were talking about this before recording the show that I work a lot, and I'm a workaholic. I've been talking about this a lot on podcasts and talking about it a lot because Joe Polish of the Genius Network, he helped me understand that workaholism is a publicly accepted form of addiction. So if you have those tendencies, mm-hmm. and some people wear it like a badge of honor, mm-hmm. hey, all I do is work. And I'm being coached on how to make those changes in my life to prioritize things that don't involve work mm-hmm. and to try and not find a balance. I think work-life balance is just really a myth and quite elusive, but really taking quality time to have more freedom of purpose and freedom of relationships and mm-hmm. freedom of time and money. The money piece, once you get to achieving cash confidence, it's a very peaceful, stress-free way of life financially when you get there. Mm-hmm. But there's a whole lot of hard work that you have to do to get there. Mm-hmm. The key is don't kill yourself doing it, mm-hmm. and don't, neglect other aspects of your life that are really important for you to be a whole person, mm-hmm. for you to really feel fulfilled and to be fascinated and energized. And so that's what I'm so grateful to Joe Polish, to Dan Sullivan for coaching me on that. I took a 6-week sabbatical last year, the longest I've ever been away from work since I was a fetus. And this year I took 8 weeks. And had you have said to me 3 years ago, if you and I were sitting here and you said, Jason, I'm taking a look into your future, and next year you're going to be on a 6-week sabbatical, I would have thought you were
Impossible.
certifiably nuts. Like, are you kidding? Taking that much time away from work? It seemed impossible to me.
Yeah.
And so I faced the fear and I did it anyway. And I'm eternally grateful to Joe and Dan for inspiring me to do that. Joe took a year off.
Good for him.
1 full calendar year. And I was like, okay, there's no way I'm starting there.
Yeah, baby steps. Baby steps.
Gradual and incremental.
For some people, take a weekend off.
Yeah. Create free days in your life and really honor them. You know, no work, no access to work. Like on my sabbatical, my teammates, they turned all my technology off. So all my passwords were changed. The alarm,
So you couldn't even get in?
Yeah, so imagine if this was my office. They changed the alarm code to the office building, so I couldn't even get in. And it was just all methods of keep Jason away, let him really truly honor his sabbatical.
Right.
And my team went through that sabbatical with me, and the businesses grew and they're thriving. And so you almost think, oh my God, like, am I needed?
Yeah.
But that's just a self-manifested, of course the team needs me and I need them. And I would recommend it to any hardworking entrepreneur. Not if, but when. Take a sabbatical. Take time away.
I think I'd even challenge the listener, for example, to write it down, 6 weeks sabbatical.
Yeah.
And then start figuring out how you get there.
Yeah.
Because I'm sure everyone has lots of objections. I have lots of objections when I'm listening to you speak about it. And then start addressing them. Write them all down.
For
and
sure.
then how are you going to counter them all?
Yeah.
Right.
It's fear, right? It's the fear of I'm going to miss out on something, or will my businesses continue to operate well without me being there? Can I count on my teammates, right? I say that coming from a place of, can I count on them to keep the businesses afloat? And what Dan Sullivan told me, he said, you know, the truest measure of your team's strength is when they can't get a hold of you. So if there's no way for them to reach you and they've got to be in problem solving mode, wow. If you're there all the time, you're robbing them of an opportunity to grow. And so I said, wow, that's brilliant.
Right.
And, but yeah, I would recommend it.
So I'll share a quick tip what I do for real estate investors, for example.
Yeah.
One tip I have, one thing that I do, for example, is my handyman, we've given him $1,000 cash float, right? So if he has something under $300 he needs to take care of, he already knows, and it makes the tenant happy. He already knows to not even ask me.
Right.
And also, he has the cash available to be able to draw it down for a couple properties until he can get back to me on like what everything, you know. Really, I don't care. Like, just let me know at the end of the month, right? I just need it done. I need my tenant. More importantly, I need my property taken care of.
Yeah, and it's one or more less things for you to be thinking about and expending energy on, right? And you're empowering someone to do something great for a tenant, which is great for you as the property owner.
Yeah, my customer pays me over $10,000 a year.
There you go.
Right. Yeah. And then just to bring it up, because I haven't brought it up in a while, you know, the tenant landlord relationship is often, I think, a little. The way I frame it for my clients is, if you spend $10,000 a year at a restaurant, how do you expect to be treated?
Very well.
Very well.
Yeah.
And so that's how I frame my tenant relationship with my everyone who's on my team.
Yeah.
Right. I expect them to be taken care of.
Absolutely.
Right. They have an issue. You need to deal with it.
Yeah.
And of course you should deal with it, because for someone who gets paid hourly, there's more money for you to be made.
Exactly.
So then, it's just instructing them to like look around while you're there. Look around for stuff that needs to be fixed.
Exactly.
Right. You may not have to do it then, but like add it to like the spring maintenance schedule type thing. Right. So Jason, I don't know if I told you this story, but how you ended up in our world is because friends of mine. Yeah. Were lots of friends of mine have sizable real estate portfolios. Yep. And it was like no from like every lender, until one of our friends shared how, in one of my real estate masterminds, like a high-end mastermind, was sharing how they were approved for 3 more mortgages plus a refinance on their own principal home because they purchased a whole life insurance plan.
Yeah, dividend paying, participating whole life insurance. Yeah.
And then I was like, okay, I've heard about this whole life insurance thing a couple of times. Now you get piqued my interest. Because any investor, like almost every investor runs into a wall on financing.
Yep.
And then here we have a totally legal way that opens up the door.
That's right.
So, but also before we were recording, you explained to me. So my understanding is not complete. That's why I have you on.
Yeah.
I only generally see rich people doing this.
Right.
But you're telling me that anyone should be investing in whole life insurance.
Most definitely, right? You know, if you think about dividend paying participating whole life insurance is just a tool. And it just so happens to be the best tool to get the job done of becoming your own banker. And so when you walk into a commercial bank doesn't indicate that you have to be wealthy to be a depositor at the bank.
Yeah.
And so the
bank doesn't care.
Yeah,
you have $5.
They just want that capital coming in, and they want that money flowing. And so, going back to your earlier point about what happened with this person in your high level real estate mastermind, here's something that so many people just don't know. To operate as a commercial bank, you have to maintain what's called Tier 1 assets, and Tier 1 assets can be comprised of gold bullion, cash, and something that is aptly named BOLI, bank-owned life insurance. And commercial banks buy dividend-paying, participating whole life insurance contracts by the truckload. And it's one of their best Tier 1 performing assets because of how stable, predictable, reliable, and all of the underlying contractual guarantees.
Mm-hmm.
So
sorry, Jason, just pause you there. So this is something that actually appreciates versus cash and gold.
Well, big time. But it's contractually guaranteed to appreciate.
Right.
And it can't go backward.
The word guarantee scares me.
And it can't go backward. So I was sharing with Cherry earlier. The economy recedes, cash value goes up. The stock market falls, cash value goes up. The real estate cycle turns against you, cash values go up. So if you're sitting down with a lender and you take participating dividend paying whole life out of the equation, mm-hmm. and the lender says, listen, you've hit a brick wall.
Yeah.
Right? You're leveraged to the max.
Yeah. We've already accounted for all your gold. It's not enough.
Exactly. We've looked at all of your assets. We've looked at all of the ratios that we need to determine whether or not we can lend you another dime. Think like the banker for a second here. If the lender understands, because this is a Tier 1 asset on their own balance sheet,
right,
and you sit down now as a prospective borrower and you say, well, listen, I've accumulated some dividend-paying participating whole life insurance. Uh-huh. I've got cash value. Mm-hmm. I've got a guaranteed death benefit. Mm-hmm. Well, the lender, if they're halfway smart, which they are, the lender's going to go, wait a second. You've got an asset on your balance sheet that's contractually guaranteed to grow. We're quite familiar with it because we buy it by the truckload. God forbid if the unthinkable happened to you, there's a tax-free windfall of money that's going to show up exactly when it's needed the most. Does that make you a better prospect for lending or worse?
Well, if people understand the probate process, then it makes you way better.
Right, but the lender wants to find every reason to get the deal approved, right? Yeah. That's why they're in the lending business.
Right.
So if you give them another tool from your toolkit that says, listen, this makes me a better qualified borrower. Mm-hmm. But that's secondary. It's secondary to you have a policy or you have a system of policies in place. You've got the best tool to get the job done. But if you don't know how to use the tool,
right,
you're likely not going to turn out any good work with the tool. And in fact, you may end up breaking the tool. Mm-hmm, mm-hmm. So you got to work with a good coach who can lead you through how to implement this process. The dividend paying participating whole life insurance contracts are just a product.
Right.
Becoming your own banker, the infinite banking concept, is a process. And we're going to touch on this at the Wealth Hacker Conference.
Fabulous.
To really pull that together for people, where they're going to go, oh my goodness, I grasp it. I get it. Mm-hmm. I know that fundamentally some organization must perform the banking function as it relates to my needs. And it's not just temporary. It's for the rest of my lifetime. Mm-hmm. So if you're a real estate investor and you're active, what you're doing is you're making the wheels of the banking business and the real estate business turn in that order.
Mm-hmm.
You're not controlling the financing function.
Mm-hmm.
The process of becoming your own banker has nothing to do with rates. It has nothing to do with interest rates, rates of return, any of that. It has everything to do with how you go about financing the things that you need in life.
Mm-hmm.
Think of all the things that you need to finance throughout your lifetime.
For
Right?
the real estate investors,
But think
more
about
than we're worth.
Yeah, but think about it. Even as a real estate investor,
Yeah.
it's not just the property. It's everything that goes on with the property. It's unplanned vacancy. It's bad debt. It's new appliances, new floors. It's
Car loans.
It's new roof, new shingles, whatever it is. The money must come from somewhere to take care of all those things. So if you can control not only how you're financing your real estate investment portfolio, but you also have total and absolute control over ready access to a growing pool of financial value called cash value that increases every day and it cannot go backward, and you're paying no tax on the daily accrual of that cash value, how much of your capital do you not want in that entity? It's just a logical question. And you mentioned earlier, well, the only time I ever heard about this was from wealthy people.
Yeah.
That should tell you everything you need to know.
Yeah, wealthy people are doing it.
So
Or just to add, like my friends Tom and Nick, my mentors of mine, Tom and Nick Karadze, they also brought this. They also speak to this as well. I'm like, okay, they're pretty smart too. We need to keep digging into this.
How long? Here's a question that my late mentor, R. Nelson Nash, who wrote the book titled "Becoming Your Own Banker." It's a 92-page read. It's a great book. If you haven't read it, you have an opportunity. And Nelson asked me a question. I'll never forget it. So we were standing at the inside of the meeting room at the annual Infinite Banking Think Tank Conference. And I've been privileged to speak there. This 2023 will be my, I think my 11th or my 12th consecutive speaking appearance there. And Nelson said to me, he said, "Jayson, I have a question for you." So we're standing at the back of the room. There's a speaker on the platform delivering a great talk. And he says, "Jayson, I have a question for you." I said, "Sure, Nelson." He said, "How long do you think a skyscraper would stand on a weak foundation?"
With climate change? No,
I said, not very long at all. So he said, "Listen, you can have all the tools, the calculators, you can have all the knowledge. But if you do not understand the ridiculous simplicity of what becoming your own banker really is and the foundation that represents in your financial life, you can stack as many things, real estate investment, crypto, stocks,
gold,
mutual funds, gold.
Yeah.
You can stack all of that really high and build a really tall skyscraper. But if you don't have that strong foundation, it's going to topple over. And how many people have you met in your lifetime who haven't experienced some kind of financial setback as it relates to any of those things that I just described?
Yeah.
Dividend paying, participating whole life insurance never has been, never will be an investment. It's a unilateral binding contract. You become a co-owner of the life insurance company. And in Canada, interesting trivia, has never failed to produce a divisible profit in any year of operation since inception. And in Canada, that year is 1847. So I want you to think about all of the calamity that's occurred the past 176 years in this country.
And to come.
Political turmoil, the Great
Civil
Depression,
wars,
COVID-19, H1N1, SARS, 34 recessions, the tech bubble bursting in early 2000.
Couple world wars.
08, 09, world wars, you name it.
Yeah.
And these life insurance companies continue to be the most financially solvent institutions on planet Earth. The wealthy understand, as everyone, regardless of how much money you're making, as everyone should understand, is that your money must reside somewhere. So what better place to have it reside than here?
Right.
And then from that very place, you can set about achieving all of the financial objectives that you have in your life. I'll tell you, in our family banking system, we're going to be talking about family banking at the Wealth Hacker Conference. Plug for the conference. Have you ever heard the expression that one decision one decision can change the course of your life,
Yeah, come to the conference.
come to the conference. And so being at the conference, you're going to hear all about family banking. Because I want you to think about this.
Oh, people should bring their significant others.
Oh, yeah. Be there. Be there with your spouse.
'Cause it's better to hear from you than to hear. I do it all the time. Like I can't explain this to Cherry. I need her in the same room.
Yeah.
Right.
To be there.
Yeah.
And we're going to talk about
Get your whole team on board.
Yeah.
Right. So your significant other, maybe your adult children.
Yeah.
Yeah.
Because money, think about it in simplicity. Your viewers, your listeners, they're earning income. Rental income, T4 income, interest income, dividends, whatever source of income. Is it not true that at present, all of that money is flowing through the books of someone else's bank? I say that again. Someone else's bank? How much of that flow of money do you want flowing through your system versus someone else's? Logic would say all of it, but it cannot be achieved overnight. It is meant to be achieved gradually and incrementally over a period of years. I'm 15 years into my journey. I don't rely upon a commercial bank for anything other than the convenience of debit. That, to a real estate investor, is like heaven on earth. Like, that is my beliefs. That is what I want. Like, if I don't have to rely upon a commercial bank for anything other than the convenience of debit, I feel peaceful. I feel stress-free. My net worth goes up every day, no matter what. And it can't go in the opposite direction. It cannot go backward. From that foundation, I build my skyscraper. I buy businesses, I invest in real estate, I lend capital, all of these things that I'm able to do because I know that that foundation, it only cures stronger every day,
Right.
every single day. And so how much capital do I not want flowing to that foundation?
You know, explain this all at the conference.
Absolutely.
It's not the easiest to understand, and I don't fault anyone for not understanding this.
Yeah.
Because I read The Psychology of Money not that long ago, and we just haven't been that financially well off like forever. Like many Canadians, for example, if they're a real estate investor and listening to this, very often they're the first generation ever of their line to be successful financially.
Right.
So the whole idea of savings, of buying large quantities of gold or insurance is like they're the first generation where that was ever available to.
Right.
So I don't fault anyone for not understanding this. I didn't learn this from my parents. Cherry and I had to go learn this ourselves. Right. Our parents were poor immigrants. Right. So and then my understanding that helped me with the understanding where. And also, there's more than one type of whole life insurance. Like Peter's clarified for me for that because I actually have a friend that bought the wrong one.
Yeah.
And didn't have all these nice things available to them because they had the wrong product.
That's right.
They were structured incorrectly, so they didn't get all the banks didn't love them. Like
and they didn't get that maximized rapid accumulation of cash value and so on. There's ways to engineer a policy that would not be ideal to implement this process. It doesn't mean that the policy is no good. It just means that it's not optimized for this process, right? So that's where we come in.
Right. And then also whole life insurance, I just use the short term for it. It sounds very much like insurance. As in, like, I see, for example, I view gold and holding cash as insurance.
Right.
They're not investments.
Right.
Right. I think, like, for example, the average Canadian understands why you have a little bit of U.S. dollars.
Right.
It's not an investment. It's for you to have available to you should you ever go to the States and use it.
Right. Yeah.
Right. It's insurance, so then you don't have to, be exposed. You don't have to exchange money all the time.
Right.
Right. Okay. So I have some sort of understanding. Now you mentioned that you funnel all your money through the strategy.
That's correct.
And you use it to actually buy other assets and investments.
That's right.
So you use it you mentioned lending.
Yep.
So could you kind of touch on that? Like how do you flow that through? So then you're you're writing your own mortgages, for example?
Yeah. So we do a lot of bridge financing. We do a lot of private lending for.
Right. So you use like a mortgage broker that brokers these deals for you?
That's a part of it. Yeah. Like we.
I'm trying to think the easier model that most people are used to.
Yeah. And we did a deal here recently where a fellow was renovating a cottage and needed some capital, and was a great candidate for borrowing based on all of our criteria. And so we put up the capital and we're earning interest, and the flow of the money is really simple. So we contact the life insurance company and we request what's called a policy loan. And that policy loan is unstructured. So what that means is that there's no repayment schedule. The policy owner, in this case me, I control the repayment schedule, the frequency of payments, the amortization time frame. I control that. So that puts me in a position of comfort, and it makes me feel peaceful about the whole deal. My total cash value in the policy continues rising uninterrupted by the loan. So if I look inside the policy and the policy has $100,000 of total cash value, and I've got a $1 million death benefit, and I need $50,000 to lend to a borrower, I contact the life insurance company. I borrow against that $100,000 without withdrawing anything from the policy, because cash value is not really money. It's a value attributed to the contract. So I'm borrowing against that.
So sorry, Jason, how does that contract value get determined?
The value is determined by the guarantee that the cash value must match the total death benefit by age 100. So it all begins with the death benefit, and then the cash value follows the leader, basically. So the money comes from the insurance company by way of a phone call or submitting a loan request document. The insurance company asks two questions. Would you like us to mail you a check, or can we electronically deposit that money into your account? Now, I want your real estate community to just hit the pause button and rewind and listen to that again. There's no, can you bring in all of your financials for the last 322 years and show us every penny that flows in and out of your life? And there's none of that.
Right.
No lengthy, nosy credit applications. Nothing.
That's because the insurance company knows what the underlying asset is.
Well, the insurance company, that's a good point. The insurance company itself is guaranteeing the collateral for the loan.
Yeah.
Right? So the moment that I get that $50,000 from the insurance company in my hands, they place a lien on my death benefit for the loan balance.
Right, because they understand exactly what the underlying asset is, which is their own, versus typical loan is based on your ability to repay whatever collateral you're putting out, your house, your car, your Bitcoin, whatever.
You got it. And so the insurance company says, listen, we're going to lend you the money. It's unstructured, so just pay it back on your terms. God forbid if you pass away and there's a loan balance outstanding, don't worry about it. The death benefit's going to extinguish the loan balance, and the remaining death benefit
the insurance
proceeds,
policy pays itself, pays them back. Makes
there you
them whole.
go. And so think about it from this vantage point. If you went into a lender to finance a deal, and the lender said, Erwin, we're happy to lend you this money. Repay it on your terms.
Never happens.
And God forbid if you pass away, don't worry, there won't be any indebtedness left behind.
Right.
Oh, and by the way, we're going to contractually guarantee that the property will increase in value every day and it can't go backward. Right. You and I wouldn't even be recording right now. You would have never even had a conversation with me. Mm-hmm. So this enables you to become the banker in your life. What does that mean? It means that you're taking control of that function as it relates to your needs. The money flows into my hands. It's the life insurance company's money. It's not Jason's money. Jason's money is growing in the policy, uninterrupted. Mm-hmm. The money flows to the borrower. The borrower is repaying the loan on my terms. Who's the banker now?
You're the banker. You're the lender.
In both transactions.
Yeah.
The policy loan and the lending deal. Yeah. Money comes back with babies, right? Called interest.
Greater than the interest rate you're paying.
Greater than my cost of capital, right? Because capital has to flow at a cost. What I'm doing is I'm taking capital and I'm putting it right back into my aquarium so that when the next high caliber opportunity tracks me down, I have ready access capital to pounce on that opportunity.
Right.
We're in skyrocketing inflation, interest rate uncertainty outside of the fact that it just keeps climbing, political turmoil. We know the government's going to need more money in the future than what they need now. So we definitely know there's going to be changes from a tax perspective. And if you look at all of those elements of uncertainty, that creates stress and pressure for people.
So Jason, just pause you there.
Yeah.
Because a lot of us think there's going to be more, the tax rates are going to increase.
Yeah.
Like capital gains, the exemption is currently 50%.
Yeah.
It may go up. Like, we should all be looking for alternative investments that doesn't have a tax liability.
So you beat me to it. The participating dividend paying whole life insurance contract, which is not an investment, it's a unilateral binding contract. The only party to that contract that's required to make and fulfill promises is the insurance company. And guess how often they failed to fulfill those guarantees? It's never happened. And so, if you know that the fundamental truth that your money must reside somewhere, and you store capital inside of this entity, and you co-own the life insurance company, and you know that in these economic uncertain times, opportunities of high caliber are going to present themselves.
Oh, yeah.
If you need to go to a commercial bank to take advantage of that opportunity,
Much slower.
the odds change in this climate versus somebody calls me and says, we have a distressed business. They need
Or it could be property.
Yeah. They need cash.
Yeah.
And I have ready access to a growing pool of financial value on demand and on my terms. Right. I'll say that again. I have ready access to a growing pool of financial value on demand and on my terms.
Should we give it your cell phone number now?
I can take advantage of that opportunity immediately. I don't have to go through the strain that someone standing next to me does, who's not practicing this process in their lives.
Because most people think they just have to be holding cash in order to take advantage of these.
Right, but where are they storing it? In someone else's bank.
Hopefully not cash.
And so if you think about it, Nelson, and again, I can't express the amount of gratitude that I have for my late mentor, R. Nelson Ash, who again wrote the book titled Becoming Your Own Banker. It's an amazing read. And he would often say, when you have ready access to capital, opportunities of high caliber will track you down.
Should we give it your cell phone number, email address? I'm kidding.
Erwin, I would say to folks, get in line. I get contacted daily with opportunity, and I'm blessed, and I feel grateful for that.
Sorry, Jason, just let me pause you there.
Yeah.
Because beginner investors are always asking, like, where do I find deals?
Right.
And a good way to find deals is to let your network know, like your realtor, your lawyer, your mortgage person. Definitely. If you let them know you have capital ready access with that you don't need approvals for.
Yep.
Right. You better believe you're on the top of their list when they got something good.
All day, every day.
Right. Versus the person that has I gotta go pre-qualified. I have to submit all my stuff to the bank. Hoping for a pre-approval in 2 weeks.
Yeah. Like, would you rather be in a position of total and absolute control?
Yeah.
Of course. Anyone who possesses logic would say, yeah, of course I want to be. But we live in an instant gratification everything. Instant food, instant coffee. You could order a parcel from Amazon. It'll be here before you shut the office down today. This is meant to be achieved gradually and incrementally over a period of time.
Right. Part of the get rich slow process.
Right. I am 15 years into my journey, and if you would have told me 15 years and 1 day ago that I was going to be where I am today as a result of implementing this process, I didn't see it. I didn't see it. It took executing. It took simulating. It took a commitment. It took, first and foremost, it began with the desire to change. And then going through that period of introspection where you look at all of your financial resources and you say, okay, 100% of my existing financial resources are already prioritized for something. I'm already prioritizing every penny that's flowing through my life. If I want to begin to implement this process of becoming your own banker, the infinite banking concept, the financial resources are already there. It just requires a reallocation of priority. It's not going out and creating new money where no money existed before. It's taking existing financial resources and reallocating, reprioritizing. And I began to do that gradually and incrementally over a period of time. And fast forward to today, we've got 67 participating dividend paying whole life contracts in our family banking system. And at the Wealth Hacker Conference, I'm going to
explain why.
I'm going to unpack that.
Right.
And I'm going to talk about the advantages that represents.
Right.
And that how people in attendance at the conference, they can do this too.
Right.
They just need to realize this isn't something that's going to be achieved the day of the conference. Right? It's going to be a period of years. But, and again, I got to give credit to Nelson. He said, you need to be thinking 3 generations past your own, because the generations that come after you are going to need the use of money as well. And not if, but when you die, if you do not have this foundation in place, you're going to trigger a pretty significant terminal tax bill.
Yep.
Where's the money going to come from to pay it? It's called liquidation.
Yeah, selling off assets.
Right?
Yeah.
Whereas if you want to talk about the term investment, in my humble view, the best definition of an investment is one that pays you the most when it's needed the most. The moment you die, those unilateral binding contracts, those insurance contracts, are going to pay. It's called a promise to pay. It's a contractually binding promise to pay. And that money shows up and there's no tax bill attached to it. So now you've got all the capital necessary, your family, to take care of any terminal tax obligation, and they still get to own all of the assets that you work so hard to accumulate over your lifetime. So when you speak to someone wealthy and you ask the question, is there anything stupid about doing that? Any wealthy individual is going to say, no, of course not. Like,
generally wealthy people have this.
I want to buy as much of these unilateral binding contracts as I can get my hands on.
Yeah. I know Cherry wants to actually grow our make our policy bigger next year.
That's great.
So actually, you mentioned 67. You have 67 policies within your own family, and we were talking before recording. I've been at many parties and whatnot, and people know I like to make money, so I don't know. Maybe that's why this comes up. But they say to me like, do you know you can take out a policy on someone and that's how you make money. And I've always been like, I don't understand. Confused mind says no, right?
Well,
and then you tell me you have 67 of these, because I
right.
thought this was some crazy idea.
No, it's there's nothing crazy about it.
And this is basically what people are talking about at these dinner parties. Like, did you know you can buy insurance on people? Like, I can go buy insurance on Adam if I wanted to.
Yeah, I mean, you need to have a beneficial interest in the person that you're insuring, but it brings up a point that we mentioned before recording around diversification.
Yes.
I'm hearing that all the time.
Especially now.
You need to be diversified. Okay, well, what is the root? What is the root of the philosophy behind diversification? Well, the root is you diversify so that you don't lose it all.
Mm-hmm. And hopefully that gives you mental peace.
Would that be fair?
To know you're not going to lose it all will give you mental peace.
Okay, so I'm diversifying so that I reduce the odds of losing it all.
Yeah.
Okay, I get it.
Yeah.
Well, I'm diversified in lives insured. That's my diversification. I have policies on my nieces, nephews, kids, in-laws, business partners, to name a few. So I'm diversified all right, and there's no risk of me losing it all.
So, sorry, why would you take a policy on someone else? Why couldn't you just add to your own policy?
Well, you're limited to the extent of the maximum death benefit
I see.
that the underwriters...
You're capped on each individual.
Yeah,
right.
Exactly.
So you need more individuals to scale.
And that's how you... Am I looking at the right camera? That's how you diversify. And I respect, and I just say that in good humor, I respect people's financial objectives, and they've got money scattered in a number of different things, and you've heard the saying, don't put all your eggs in one basket. I disagree with that wholeheartedly. If I control the basket, where else do I want my eggs? Like, honestly, But
actually, part of that point in not putting eggs in one basket is most people don't understand all the baskets.
Right. And so if you have total and absolute control over that basket
and understand everything about it,
how many eggs of yours do you not want residing in there?
Yeah.
Think about any period of time.
Jeff Bezos did okay with his one basket.
Oh, he sure did. Yeah. And think about points in your life where maybe you've lost money. And I can promise you, and I'm not a gambler, but if I was to bet, I would say that it had something to do with you handing control of that money over to someone else, more often than not.
Mm-hmm.
And this foundation of becoming your own banker, the process, it helps you to understand that regardless of what's happening in the economy, with interest rates, with inflation, etc., the process of banking goes on no matter what. So who is the banker in your life? It can and it should be you. So that through periods of time like we're experiencing right now, you can rest easy knowing that your net worth is going to be larger tomorrow morning than it was when you went to bed.
Mm-hmm.
Not because you've got some, secret code to crack there and share with people and, hey, come buy my stuff and I'll teach you how to do all this. It's because you've taken control of this financing function as it relates to your needs. That's the essence of becoming your own banker. The insurance contracts are just a tool. They're just a tool. But I'll tell you, it's been the best tool I've ever owned. And I'm not really I don't do handiwork and things like that. It's not part of my unique ability. But this is the best tool I've ever owned.
And your experience isn't alone, especially right now.
Oh gosh,
we were chatting earlier this week, and you're telling me all these clients of yours, their balance sheet, this is the only thing that's green.
Exactly. Yeah, clients are contacting us literally daily, and they're saying, "Listen, we heard you shouting from the rooftops when we were in the lowest interest rate environment we've ever experienced, when gaining access to capital was no more difficult than it would have been getting a gumball out of a gumball machine."
Yeah. And everything was going up.
Everything was
everything
just
was going up.
Sunshine and roses.
Yeah.
And we heard you screaming from the rooftops. Not if, but when we start experiencing what we're experiencing right now, your policy values can only continue to go up. And people are contacting us and saying, look, I'm taking a look at the balance sheet, and this is the only thing on my balance sheet that keeps increasing in value, outside of the fact that I may have some pennies put away in a savings account somewhere. Mm-hmm. It's what a peaceful, stress-free way of life it is when you get the bankers out of your life.
Speaking of stress, there's people out there, including some of our clients, who have no more access to. Lenders are saying no.
Yep.
Is not getting a whole life policy going to help them?
All day long. And the longer you wait, the more you penalize yourself.
It's kind of crazy because, for example, part of the reasons why a lot of us invest in real estate is, the bank will give us cheap money on it.
Yep.
It's the cheapest money for this. So there must be something good about owning real estate.
Oh, for sure.
And you're telling me that this is grouped in the same category as gold in terms of collateral value.
Well, hey, let me share. Let's talk about collateral value. So, Erwin, I'll put you in the driver's seat as a policy owner, okay? So you've got a policy, and it's got $1 million of total cash value. It's got a death benefit of $2 million. I'm just picking arbitrary numbers. And I'm putting myself in the driver's seat of owning a piece of property. So I own a piece of property free and clear. It's unencumbered. And it just got appraised at, wouldn't you know it, $1 million. Now, you and I decide to go to lunch together, but our lunch break is going to go to the bank. So we go to the commercial bank, and you and I sit down, and the commercial banker says, Erwin, we'd be more than happy to give you an operating line of credit or just an advanced loan, and we're going to lend to you $1 million. You can capitalize the interest and just wipe out the balance when you die. Or you can make repayments at your convenience. And Erwin's going, wow, thank you.
What fantasy land are we in?
And then I say, well, what about me? I have a property that's unencumbered. Here's the appraisal. It's been appraised at $1 million. And I say, well, Mr. Lowe, we're going to have you sit down with a loan manager. And if you can clear your schedule for the afternoon, we've got documents for you to fill out and a process for you to go through called qualifying. And presuming that you do qualify, we'll extend to you a home equity line of credit for $650,000. Now, if you want to bump this up to 80% loan to value, it's going to be a principal and interest mortgage for the balance. So you're going to do things on our terms. What does that tell you about the strength of the asset in the eyes of the lender?
Very different.
Night and day.
Yeah.
Night and day.
And if you don't have a job, I don't know how you're getting that mortgage.
Not a chance.
Yeah.
And so I guess in simplicity,
Sorry. I don't have to have a job either. You're telling me the commercial banker will just give it to me.
if you don't have a job, the commercial lender will likely get you to about 75% loan to value.
All right.
No qualifying.
All right.
Above that, you can't be insolvent or pending insolvent. You can't have derogatory credit. There's still criteria. You're borrowing from someone else's bank.
But wow, the flexibility.
And the control.
Yeah.
Just how would it make, I'm speaking to you now, the viewer, the listener. How would you feel being in a position of total and absolute control financially as it relates to opportunities that are tracking you down, whatever financial objectives you have that you want to set about to achieve? If you're in a position of total control, it's very peaceful. Very peaceful. Isn't that good?
And then for folks who say they have life insurance, do they have the same benefit?
If they only have temporary insurance, like term life insurance, they would not have that same benefit because you're only renting the benefit.
Right. In term insurance, life insurance they generally mean term insurance.
Yeah, people purchase.
I would say like 95% of people who say they have life insurance, they really have term insurance.
Oh yeah, I would say it's so common, and
especially if it's via their company benefits.
Oh yeah,
it's almost always, is it not?
Yeah, it's group employment benefit, which is different. But if you look at it from this perspective, here's another interesting bit of trivia. If you take out term life insurance, which has a purpose, it obviously, but if you're renting the benefit, so if I could get you $1 million of death benefit for $35 a month, and you were life insured for the next 10 years. What do you think the odds are of you dying in the next 10 years?
Hopefully not good.
The insurance company, if they thought you were going to die during that 10-year window, then they're making a really lousy bet by only collecting $35 a month in exchange for a promise to pay $1 million. Yeah. That's why less than 2% of term life policies ever pay out a death benefit.
Oh,
so
that's a really poor return.
Well, but think about it. It's a great return for the life insurance company.
Oh yeah, great for them.
So if you're a dividend paying participating whole life insurance policy owner, you co-own the life insurance company.
Yeah.
So that's a great return for you as a co-owner of the business, isn't it?
At least you benefit off of.
It creates an enormous cash float.
Yeah.
And what do you do with the cash float?
Right. So you
multiply it.
So instead of renting, you're getting some equity.
Oh, from day one. Yeah. Isn't that good? So real estate investors get.
Oh, I love equity.
Right. It's a match made in heaven, and
the analogy I often make is like, if you don't like what the price you're paying at the gas pump, we got a Tesla, but buy some shares in the gas company, buy some Suncor. Yeah, then exactly. The more you're paying, the more you're making.
Yeah, exactly. And as it relates to, if you just think about investing in stocks, my own personal experience is, and this may sound a little corny, but it's the honest to goodness truth, is I took a look inside my pantry. I took a look inside the fridge. I took a look inside the medicine cabinet, and I just literally looked at all the products that I consume, no matter what's happening in the economy or with inflation or anything. Mm-hmm. So am I going to keep shaving as inflation skyrockets? Yeah. Am I going to, continue eating cereal? Yeah. Am I going to, and so on. Mm-hmm. Do I keep powering on this device? Yeah. Well, I wonder who makes the components that puts this together.
Your iPhone, yeah.
Right? And so that was just my ridiculously simple approach to it, and it's worked out incredibly well.
Yeah.
And not because I knew how to time a market, but because I knew that I was thinking long range as it related to the consumption of these goods and services, and then take all the dividends from owning those stocks and reinvesting it in more stock, and it just grows and grows and grows. Where I'm going with that, I do not know on any given day what the value of that stock portfolio is going to be. But I promise you, I know on any given day what the value of all my participating dividend paying whole life contracts are today and what they're going to be tomorrow and the day after that, and the day after that, and so on.
Diversification.
Yeah. Well, for me, it wasn't an either or.
Oh no, it should be always and.
Yeah.
Yeah. I think the both the wealthier you get and the more education one gets, the more diversified they are.
I think so. Yeah. It's for me, I try to stick to what I know.
We'll add to that something we were talking about before is you and I were discussing. I'd argue. So hang on. So to give some context, statistically, we're living longer than ever.
That's right. Yep.
COVID-19 was the first time that we actually regressed in our increasing life expectancy.
That's right.
We're wealthier than ever.
Yeah.
Even with this correction we're having, we are still we have a blip right now, but still generally we are wealthier than we were in 2019.
Yep.
Yet I would argue mental health is probably among the worst it's ever been.
Yeah. People are really, really suffering.
And one of the lessons I've seen a lot of real estate investors take is they understand that most of them are active.
Yeah.
Many of them have exited, and now they're looking where to put that money.
Right.
Not only were they looking to where to put that money, but generally I find they're looking for more passive.
Yep.
More peace of mind.
Yeah.
Less wear and tear on their mental health.
Oh God. So
where would this fit on the spectrum?
Oh, okay. Well, let's just check a few boxes. Okay. We have contractually guaranteed daily cash value accumulation. Check the box. We attract no tax on that daily accrual.
Oh, that's big savings.
Check the box. The policy is exempt from the passive investment income tax rules. Check the box. We have an ever increasing total death benefit, of which the total cash value must grow to match. Check the box. We have ready access to capital on demand on our terms. Check the box. When we borrow against that accumulation, we're not interrupting it. So now the real estate investor in that example who has liquidated and they have this enormous stockpile of cash, the truth is that the money must reside somewhere. If you store it on the books of someone else's bank, then you're enriching someone else's stockholder. If you store it on the books of your own system, you're building your own warehouse of wealth, and it's indestructible. So you pour this strong foundation to go build your next skyscraper that's actually going to stand and can't fall over. And from that very place, you can do all those things financially that you set about to do. And we find, at least in our experience, and we deal with real estate investors coast to coast, is that once they catch this, they know exactly what to do. They want to get as much capital flowing through this tool as possible. Understandably so.
And then, Jason, something kind of on the same lines, part of my own education in this area was I had questions for you.
Yeah.
Because there's a couple of vendors that offer similar products.
Right.
And you told me you actually have money with all of them.
That's right.
So you've sampled everyone's services and products.
Absolutely.
Because what I found is when people find out which company I went with, they always have like negative things to say about it. Some positive, some negative, often negative. But I found the same true with my choice of cars. Yeah. Like I drove a BMW for 10 years. Yeah. And I had lots of people that didn't like BMWs. And now I drive a Tesla. And like even more polarizing, more people tell me what a terrible choice it is and how bad for the environment it is. Yeah. But again, you've sampled everything.
That's right.
Which is way more than me. I imagine way more than everyone out there.
Yeah, and the only reason I did it is because I wanted to speak from a place of authenticity.
Right.
Not from opinion.
You've put your own money into everything.
Precisely. And I wanted to go through that journey as a customer.
Yeah.
Because at Ascendant Financial, we want to be continually developing a deeper understanding of what exactly it is the clients we have and the clients we want to have truly value. And then we will not put them in any situation where they're not getting what they truly value. Right. And there's a lot of great companies, without running an advertisement for any one particular life insurance carrier in the country. There's a lot of great carriers in the country, not all of which are suitable for a great client experience as it relates to what we're talking about. Right. And so,
which is okay. It's okay that people have different service offerings.
Oh yeah, for sure. And for me, it was just, I want to be able to speak to this from a place of authenticity. Yeah. It's like, I'm a customer of all these carriers. So I can speak firsthand and share fact
Right.
Right? Everybody has an opinion, which you're entitled to. That's fine. But I will say that many years ago, I'm speaking to 2011 to be precise, Nelson Nash said to me at my very first Infinite Banking think tank conference, he said, let me ask you a question. If you're dealing with a mutual life insurance company, that means that they're not publicly traded. There's no stockholders. Is that private? I said, yeah.
Technically, yeah.
Yeah, because you're not on the
private
government's
versus
radar,
public, yeah.
right? The government doesn't know that you have those contracts in place. It's private.
Yeah.
Private contract, check the box.
Mm-hmm.
When you request a policy loan, is that a private loan arrangement between you and the insurance company that you co-own? Yeah. If you have a board that looks after the day-to-day operation of this insurance company and they have no one else to be responsive to except for you and every other participating policy owner.
Right, because you are the owners.
Right.
Right.
Is that an advantage?
The customers are the owners.
You got it. And
so who do you care about? The owners,
Big
who happen
time.
to be the customers.
Exactly. He said, now let's contrast that with a stock company.
Very different.
You have a board that is responsible primarily, first and foremost, before any other human being on the planet, the stockholder.
Yeah.
So,
which is often themselves too.
Immediately, you're dealing with a distinction that needs to be well understood.
Yeah.
It's not that one company is bad and the other one is good, and all the noise that you could hear out there, which is just all a bunch of nonsense. All I know is that if I'm dealing with a company, I have a private contract, my dealings are private, the board is only responsible to fulfill the mandates to me and to every other participating policy owner.
Yeah.
When a divisible profit is to be distributed, the sole beneficiaries of that divisible surplus are the owners.
Yeah.
100% of the owner's equity belongs to the owners, not stockholders.
Yeah.
There's a reason why Nelson said in his book, ideally you want your contracts to be placed with a mutual company. That's what he meant by it.
As a mutual beneficial?
Mutual meaning no stockholders.
No stockholders.
Yeah.
Private. They truly are customer first.
Big time. And
there's no other there shouldn't be any other bias or motivation.
Exactly. And so in Canada, we only have one option.
Okay.
And that's who you have your contracts with.
Right. And again, other people like other ones, which is totally cool.
Oh, that's fine. Yeah,
right.
People can, they can store their money wherever they choose.
Yeah.
But the advantages of being a mutual co-owner of a mutual life insurance company are incalculable.
Interesting.
Really.
Because one of the criticisms I heard is that my policy, that they say it's expensive, but I'm the equity owner.
Compared to what?
I don't know. They say like the commissions are high or something, but what, I don't know.
Compared to what?
I don't know.
It's just, that's just. Have you ever flown in an airplane with noise cancellation headset?
My own.
And you know how beneficial that is.
Yeah, there's kids crying. Give me my kid.
You have to have the ability to tune out that noise. I pay no attention to it whatsoever. Equitable, being the company that we're talking about, again, without running an advertisement on any particular life insurance company. All the carriers in Canada that provide dividend-paying, participating whole life insurance have a great track record. They really do. From a mutual perspective, there's only one. And so if there was more than one choice, then I would be evaluating that alternative choice. But presently, there's only one. And so far, so great. And so far, so great, meaning since 1936. I mean, it's been a little while.
So Jayson, we're running out of time. I want to thank you so much for coming in. I'm looking forward to your talk.
Thank you.
I think more than ever, people are looking for boring. It's funny because for the longest time, everyone was into real estate for boring.
Yeah.
And then when it got easy to make money, people got adventurous.
Yeah.
And now we've come back to the way boring is winning these days.
Yeah.
And it sounds like it doesn't get more boring than this if you're lumped in with gold.
Oh my God. I shared with you before we hit the record button. It's It's like right up there with watching paint dry and grass grow.
Which I think people would love right now.
Oh, for sure. Like I rest easy knowing that my pool of financial value continues growing daily and it cannot go backward.
Right.
And I'm attracting no tax on that daily accrual.
Right.
What more
right.
could I ask for? Like, I mean, that's a very peaceful, stress-free way of life financially. Yeah. When you get into the human condition of greed, or you're in a market environment where everybody thinks they're immortal and unstoppable, and then
don't talk to my Bitcoin portfolio.
Right? It's like Mike Tyson says, right? Everybody has a plan until they get punched in the face.
Especially by him.
And so I haven't had a single client call me once in 15 years to say, Jason, I'm really frustrated that my cash values keep rising every day. Right. It's really frustrating me. Right. I'm really bothered that I have ready access to capital to take advantage of a high caliber opportunity. No one has ever said that to me.
Yeah.
People are relieved. They're relieved that they got started in their journey years ago, right? And the best time to get started for people who are viewing and listening is once you have clarity. Get clarity on the process. Make sure your questions are answered. Make sure that you've got a great plan in terms of how you intend to implement it. Work with a great coach, and we pride ourselves on having the best coaches, bar none. If Nelson were still alive today, he would attest to that. And we just love what we do, and we love working with our clients and supporting them and coaching them. And 15 years into our journey, we're more excited now than we've ever been. So because of me coming up in this journey, I didn't experience soaring inflation until now. I didn't experience skyrocketing interest rates until now. And so to be able to live through this peaceful, stress-free, oh my God, you can shield yourself too from the next whatever it is that's going to impact you financially. The longer you wait, the more you penalize yourself. So stop waiting. Come out to Wealth Hacker, come out to the conference, get a copy of our Nelson Nash's book titled Becoming Your Own Banker. Believe me, you'll be glad you did. We've released our first book in a series, Canadian's Guide to Building Wealth Without Risk. This is the first in a series. Every quarter, a new book is coming, and it's just an honor to be here with you. Thank you for having me.
Thank you, Jason. And you'll have copies of the book on hand at the conference?
Better believe it. Yep.
In a huge booth.
Yippers.
Jason, as you mentioned earlier, that opportunities are coming to you.
Yep.
Can you comment on how are they? Are they getting better or worse, right, in this current climate?
Much better. Yeah, because people are motivated. People are motivated. They either want out from the deal they were in. A lot of business, in particular, coming my way in terms of companies that are just distressed. They need financing capital. They need leadership. They need, help. And so I get tapped on the shoulder all the time. I turn away far more opportunity than I move forward with.
Like 9 out of 10, 95 out of 100, you turn away?
Oh, man, that's a really good question. I've never really characterized it in terms of a ratio.
In this client especially, I'm the saying hell yes or no.
Oh,
it's got to be a hell yes.
Yeah,
there's so much to choose from.
if I'm not familiar with what exactly it is that you're talking about with me, I'm out. I don't care how good the deal is. I have to have a level of familiarity. Otherwise, I won't participate.
Right. So those people at those cocktail parties saying I should buy insurance on people, they were right.
Yeah, they actually. Yeah, they were. I mean, you've got to take care of yourself first. It's much like when you get on an airplane. I flew here today, and the stewardess says, "Listen, in the unlikely event that something goes sideways, oxygen masks will drop from the ceiling. Make sure you put yours on first before helping someone else." It's the very same as it relates to this. Take care of addressing your own needs first, and then expand that to other people in your family, your business, both.
Awesome.
Isn't that good?
Yeah. Can't wait.
That was fun.
All right.
And thanks to our studio audience. The one person, my teammate, Peter, who's here. Appreciate you. Thanks, Peter. You're awesome.
Thank you, Jason.
Thank you, Peter. It's a pleasure. Yeah.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.